on the market open in Asia, and state of traffic is $85. Brent market is up a little bit 2 days into the COP26, and the day before the Fed is due to meet and OPEC Plus are due to meet later in the week. So stacking all of that up, Peter Maguire, CEO of XM Australia. Peter, I'm still rocking my head this week on the very simple question of what stage of this cycle are we in? We seem to be on the doorstep of it ending for years now. I mean, even pre-COVID, this 10-year bull run, we've been on steroids for the last 18 months. Where in this cycle are we?
Well, good morning, Sean, and good morning to everyone. Greetings from Sydney. I don't know where we are, Sean. I know that one thing, I know that inflation's out of control. I know the cost of goods and everything else like that wrapped into the market is greatly impacting a lot of companies and certainly the people in Australia. And when you're looking at it globally, that's the issue I think Yellen's even asking. Is it transitory? And how long does this last for? I think that Jay Powell, I'm looking forward to his comments. And certainly from a taper standpoint, what the market, I think, inhales from his comments. And are we at the end of the run? Or do we just keep on grinding higher? And I find it every day I get up. I saw Tesla's up another $100 odd overnight. The whole market seems to be built on, I think, maybe a lot of hubris.
Let's bring in Bora Barryman, managing partner of Hormuz Straits Partnership, sitting in London. Bora, has the Fed lost control?
Oh, I wouldn't say the Fed has lost control. Just to sort of echo a theme that I've repeated in the past, I think this inflationary phenomenon has been sort of in line with its objectives. You know, they want to avoid deflation. That's what they have constantly been emphasizing. They do not want deflation. They don't so much emphasize a bogeyman of inflation. So they've achieved their objective in that regard. And, you know, and I think you'll see them modestly and incrementally executing their strategy of tapering as well. Because this is, at the end of the day, what are we tapering? What does that mean? It means they're going to incrementally ease off the extraordinary measure of quantitative easing, which has become almost business as usual, right? This extraordinary measure of the Fed purchasing more than $1 trillion a year of US Treasury bonds cannot be sustained forever. So they'll incrementally ease off that, and we'll see how let's say, the markets handle that. But so far, I think they're in control.
Well, if they're in control, and the same question to Peter, Bora, would you have a better answer on where we are in the cycle?
Well, that is an interesting question. I think we are in the middle of an inflationary wave. So I think it can continue on from here, and at a certain point, other measures will be taken to dampen down the effect. But I do, and you see that in the UK, the Bank of England is certainly a bit more hawkish. Canada has become a bit more hawkish because these are import-dependent economies as well, and the whole kind of standard of living, especially in the UK, would be hit by a weakening of the pound, right? So that's another factor. How strongly do you want to defend your currency against the dollar? And I'll leave it at that. But okay. The other factor, of course, is all this environmental regulation that's going to come in and increase the cost of energy for everyone. But that is not something under the control of the Fed, of course.
And it's not too immediate, but perhaps let's go to, as they say, as we approach the Christmas season, ghost of Christmas future to Jose Shalhoub in Venezuela, political risk and oil analyst, where they're barely keeping on the lights, as tragic as that very great country with all of its amazing natural wealth has imploded. Jose, what is the latest from Venezuela from the point of view through the narrow, selfish lens of oil production, oil exports, etc.?
Thank you, Sean. Good morning to everyone. Yeah, well, yeah, as I told Irene a few minutes ago, I had my power back. My power was cut. I mean, yeah, you never know when I mean, you're gonna have your power cut. I mean, between all this ration of power. Well, you know, Venezuela's gonna have a regional elections in the next November 21st. I mean, traditionally, it hasn't been, these elections, they haven't been that important, but this time we have a European Union observer mission. Maduro is trying to open up a little bit the political landscape in order to get some concessions from the US, from the Biden administration. I mean, nobody has the, you know, high expectations and high hopes of these elections, because I mean, nothing has changed and nothing will change at all on the political scene. I mean, the government has it's in total control. The opposition is in, you know, in deep division and deep contradictions. Guaido, the opposition leader that in, you know, 2 years ago, he lost all his political capital, and he's, you know, nobody wants to do with him at all. So that in the political scene, in terms of oil production, Venezuela hasn't been able to lift oil production, you know, from the current levels of 550, 600,000 barrels per day. You know, the situation is the same. We need a lot of investments. We need a lot of foreign partners, foreign investors, you know, but as long as they don't have, you know, serious legal framework, and unless they don't see a serious rules of the game, they're not gonna come. Like, you know, for like, you
Even
know,
the Chinese, it would seem like ripe territory for the Chinese to come in and take a big chunk of the Venezuelan oil industry.
well, Iran signed a long-term deal with Venezuela recently, a swap deal. I mean, we get condensates from Iran, when, you know, much needed to produce gasoline locally, and they take our heavy oil. You know, it's a long-term contract. That's one of the relevant news regarding Venezuela in terms of oil. But as you speak about the Chinese, yeah, I mean, they have presence here, but the relationship with China has cooled off in the last 2 years. I mean, it's not the same relationship, just like with the Russians. I mean, now we're our newest partners, like are the Iranians and Turkish, and in commercial terms, in strategic terms, unlike the relation that we had during former President Chavez, with, you know, Russians and Chinese. That has changed a lot.
Peter, in some ways, speaking there with Jose in Venezuela, we're in the OPEC plus spectrum, right? Venezuela is on the extreme edge of unable to produce anywhere near its historic capacity. Now we're seeing OPEC plus in its current definition, which doesn't include Venezuela or Iran or Libya, so even they're out of it. And now we're looking at Angola and Nigeria. OPEC plus isn't even able to add its 400,000 barrels a day, or / unwilling to. I think at the moment, at least within the countries of Angola and Nigeria, they cannot do it. OPEC are meeting this week. Should they make up for those who cannot?
Well, probably they should, Sean. The great issue is, are they going to, I mean, they must be rubbing their hands with glee due to the revenue and at 85, 87 bucks a barrel. And many forecasts are out there at, the 100 to 120 sort of number, which you just scratch your head and go, wow. So yes, possibly they should. And they've just got to be careful. The demand picture, we understand as far as airlines starting to open up and flights crisscrossing the world again, Sean. So from a demand picture is going to be stronger for the tail end of 21, certainly building into 22 and 23. Strong forecast unless something derails, but let's assume it doesn't. So yeah, it's going to be a nice time. I'm worried about European winter from a gas supply, but that's another argument completely that as we head into a winter period. But yes, you would have to say that someone's got to make up that shortfall, and it's going to be a boon for the people that can make it up, and going to be strong revenue over the next 3 to 6 months. So it's hard to forecast out from there. Sean, it was only a couple of months ago you put out I said on the afternoon discussion, and everyone in the team was saying we're at $60 by Christmas. Today's the 2nd of November, and it's closer to 110 than 60.
Well, Bora, should OPEC Plus and those countries within there, are they being overly cautious? They're missing out on the opportunity. Of course, Saudi Arabia moved into fiscal positive territory in the third quarter. Do they have cause to be this cautious, or could they be reaping more rewards by putting more oil on the market?
What's interesting to me is the stance of the Russian government, and we hear these statements from Vladimir Putin saying he's ready to supply the market. I'm not sure whether that's true or not, but the statement he's giving is, please adjust your policies that would give me more comfort to be a long-term partner to supply more product for you. And perhaps, Saudi Arabia, Gulf states may take a similar approach. Of course, they're coming from a different dynamic, but clearly certain regulations and policy frameworks are being put into place that are the disadvantage of oil and gas producers. So if these governments are to put in additional investments to assuage a certain temporary market blip of high oil prices today, well, they need some comfort that they won't be left high and dry in the future. After all, what is the Biden government saying? Oh, these high energy prices are just temporary. So they're temporary. Why should OPEC be worried about that? It's temporary.
Does OPEC, Bora, does Saudi Arabia, ultimately the captain of the OPEC team, risk anything by saying no to Joe Biden?
I'm not quite sure. Maybe someone can educate me here. What is Joe Biden asking for exactly? They want lower oil price. Fine. But, this is the laws of economics.
More supply. I mean, they are threatening now to at least indicating another release of the strategic reserve, as we've seen in China, and we already saw a few months ago in the U.S.
Well, why doesn't that occur? That would be a great idea. It's a temporary oil shock. Release the strategic reserve, because what the message that you're hearing, especially now I'm in the middle of the UK and you're bombarded by the BBC, is that we should not be investing more into oil and gas. This is the message from the Crown Prince, right? It sounds like the coronation of Prince Charles these days, when we're hearing that we should be on a war footing, which means, ready to bear all costs necessary to combat climate change. That is the words out of his mouth, but it's reflecting a government policy, because there is quite a spotlight on officials like Nigel Topping. I don't know if you've heard of him, but he's on the press all the time this week. The UK's coordinator for the COP26 negotiations, who bluntly states that investment into new oil and gas supply is not appropriate for our sector. He bluntly states that. And what they're really trying to kind of hammer in is the message to the finance community that you need to
Don't fund it.
basically don't fund it. There are some, let's say, more an etiquette around this, as Al Gore last week, he went on the podium to state that we should do this through,
But all of that, I think, plays to the strength of OPEC plus. I mean, Saudi and the Gulf Middle East states, they are the ones with the money, and they're the ones without concern to the shareholders. Jose, speaking to the question Bora brings up, what does Joe Biden want? Has the Venezuela figured that out 1 year into his government? What does he want from Venezuela? What would get you off the naughty boy list?
Yeah, well, it seems that the strategy from the former President Donald Trump to this current administration has changed importantly. We saw 2 weeks ago how the Biden administration extradited this envoy of the Maduro government, this Colombian named Alex Saab. He was detained in Cape Verde, and now he's in the U.S. accused of different charges. He's in Miami, and that was a victory for the U.S. administration and for the people here in Venezuela, because he's been accused of different criminal activities involving, food smuggling and all that in the last 10 years, more or less. Like 1 month ago, the government and the opposition they were sitting in Mexico at a negotiation table, talking about different issues in order to see if they could reach a deal. But that negotiation stopped once the U.S. extradited this Alex Saab to the U.S. because the government was not content with that. Also, there's 2 more people connected with the government of Maduro now detained and waiting for extradition to the U.S. Now those moves by the White House are really significant, and Maduro maybe was hoping or waiting for a different attitude from the Biden administration for lifting sanctions, but those sanctions against on Venezuelan oil they haven't been lifted at all so far. So
Peter, the question of the phone calls from Biden administration, or at least the apparent public announcements that they're calling on OPEC plus to do more in terms of more oil supply in order to calm down prices. Ultimately, for the first time, it strikes me in terms of this side of the sort of the challenge, we have Russia and Saudi Arabia in the kitchen, right? We've had them in the kitchen together now for a few years but it's been a somewhat of a upward motion, trying to sort of lift prices, sort of get the market stabilized. But now, for the first time, really, in that sort of 5-year cycle since Russia's been in the kitchen, that it's sort of trying to calm things down, trying to deflate the pressure of higher prices, both, because domestically in the US, that's bad news for Biden. Your thoughts on how that changes the dynamic between the sort of OPEC relationship with the US and the West, now that Russia sits firmly in the kitchen? Does Saudi have the autonomy to make these decisions as it did in the past?
I'm not really sure whether they do, Sean, to the same magnitude they did a couple of years back. And it's as Jose said, it's a totally different situation versus the Trump administration. And we had 3 in the kitchen at that time that were all producing 12 or odd million barrels a day. So at the present time, I think the upward swing as far as prices has really shaken the world. We understand what Bora was saying as far as no more capex and that whole clean deal, and Boris talking with his hydrogen agenda. So all of those components rolling in, looks like we're into a very inflationary, severe move to the upside as far as crude. And if that's not contained I just look at it from a retail side.
Sorry, I think we got Peter frozen there. Let's go to the survey question while Peter unfreezes on this issue of Fed. Price and wage increases are running at multi-decade highs. Is this the new normal, or do you believe the Fed will get it under control? I mean, Boris said we're in some mid-inflationary cycle, which would indicate that there's a lot more upside to this cycle. Peter was unsure, but is this a new normal, running at multi-decade highs for price and wage increases? Or do you believe the Fed will get it under control? They're expected to start tapering tomorrow, or at least to announce that. So, Bora, over to you on that point. The idea that the Fed would start, however minimal, however marginal, into a tightening cycle from the ultra loose one that we've been in. I'm wondering, if they don't proceed with that, is there a market reaction? If they do, is there a market reaction?
If they don't proceed, I would be very surprised. I think they have to dip their toe in the water to maintain some credibility, or maybe the markets get out of control because it's already so buoyant at the moment, isn't it? So let us try to stick to the plan, do this modest tapering, because they're going to continue to be hugely, proceeding with quantitative easing. However, what we see is the economy is slowing because we've had that bounce out of the lockdown. That's fine. And we know that we have to kind of slow down. That's understandable. But how low does it go? Does it really get into that deflationary threat territory or not? And let me just kind of put deflation aside. What about just demand and jobs? Are the demand and jobs there, especially in the US? And I think the Fed will be watching that more than inflation. And they'll be watching the stock market too, because, asset management is so important to the Western world. They have these trusts, pension funds.
Well, it's the only gig in town now.
It's the only gig in town.
No bonds.
Exactly.
You're not getting anything anywhere else.
And it really upholds the primacy of the US dollar in world markets, because everybody from Japan to India wants to be in on that, right? To have some of their US stock market share. So I think they can't let that also completely, that bubble pop. So they're in that limited freedom of movement area where they should go on with this modest incremental tapering, but it's certainly not, a cessation of quantitative easing by any means. And let's all remember, quantitative easing is an extraordinary measure, but it's business as usual.
Well, it is the new normal in that regard. Peter, your thoughts on what this means for Asia? It looks like Asia is finally coming around to the vaccination roadmap out of COVID, and with that, a more positive economic outlook.
Well, very much so, Sean. And what we're seeing is, the continued growth across the Asian equity markets, demand picture again picking up, travel. I was speaking to Vandana only a couple of hours ago, and she was in New Delhi, sent her best, and she said a lot of people are starting to travel. She's really noticing that again from Asia and all through, to the Middle East and back to you guys where you are as a hub. So that whole situation, I think, is starting to move forward, and the numbers coming out of Indonesia as far as projected growth, the storylines there. We've had an 18-month big stone around our necks, literally, and now we're coming out of that with a fair bit of sunshine and a wet sail and strong wind behind our back, Sean. So I'm thinking that 22 could be a strong number, though I keep on saying, and as Bora said, I'm interested to see what happens Friday night as far as the underwhelming of last month's NFP numbers. And I didn't get a chance to say it. I think the Fed's going to be looking at that very, very closely. And that's going to be a concern for them as far as what they take off the market. It's soft in a lot of ways, and that's going to show and demonstrate, I think, where we are over the next couple of months.
Well, it does strike me, Peter, that and again, it sort of end with the first question, what state of the cycle are we at, or the other unanswerable question, what does 2% average inflation mean in terms of the Fed sort of new target, which, jobs becomes, it seems, the only reference point of definition.
Well, exactly right. And the other thing, Sean, that number, the real number, if you're looking at stud lumber, copper, you're looking at the inputs as far as building costs and all of that, what really is the inflation number? And, with higher energy prices and that rolling over the next matter of months, that's going to put a severe handbrake to everyone that's not putting their hand out for a pay rise. And a lot of people, a lot of companies in Australia can't afford a pay rise for their employees. And there's a war for talent that we're noticing. So that will, I think, impact a lot of companies, both domestically and certainly across that Asia basin, to really see the footprint as far as how we drive growth forward. A war for talent, and are you able to compete against other companies that are able to, do cheaper services due to, scalability and so on?
Let's give Jose the last word with the survey question result first. Price and wage increase are running at multi-decade highs. Is this the new normal, or do you believe the Fed will get it under control? This is the new normal, according to most of the people in this room. Buckle up then if that's the new normal, and I suppose it is, because it's been with us for 10 years. Jose, looking to 2022, where does Venezuela go? What is your kind of, realistic but best case scenario, and particularly from the oil industry point of view?
Well, yes. I mean, in the last time I've been telling people and hearing this, with you in this program. I mean, as long as we don't get massive investments, as long as PDVSA doesn't get a complete overhaul, a revamping, considering its production, its refining sector severely damaged. That's why we're having a constant gasoline problem here. I mean, in the last 5 years. So this is why I insist, if there's no political change here in Venezuela, we're not going to have a significant recovery of our oil sector, because this is what's been our main source of revenue, the oil sector. That's what it is, and that's what will be in the next years, if it's not too late.
If it's not too late, if you don't miss that peak demand window. Let's wrap it up there. I would just finish with the idea that there's two numbers that are now irrelevant as one sits down to make judgment every day. One is 2% inflation. Halas, irrelevant. Don't let it distract your models. Two is the infection rate of the COVID infection rate. Irrelevant number. The only number that matters now is what's the ICU capacity in whatever health system you exist. What is the capacity of that health system to absorb the patients that are coming through the door? We're being distracted by infection number. We're being distracted by 2% inflation. We need to somehow model up for 22 where those two numbers are parked on the sidelines. That's my comment for the day. Jose Shaloub, I hope the lights get turned back on in every sense in Venezuela, one of my favorite countries in the world. I miss not getting there more often. Bora Barryman in London, thank you so much. Peter McGuire in Sydney, Australia, thank you very much. Enjoy the barbecue. All the best. We'll catch up with you later in the week. Cheers.